Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach here with the Bulletin Board Heroes on Thursday the 19th of December. Starting off with BizTax, where there's been an understandable rebound after the decline yesterday, the gap down that we had, quite a sharp move towards the main 5 pence support. The rebound up to what was resistance just before the collapse, so around the 12-13 pence area, and that's really the level to beat now for any meaningful recovery. Otherwise, we've got a chance of maybe a higher low to come in above 5 pence over the next few sessions. RSI at 35, so we just bounced off oversold indicator levels, and that explains the bounce that we've had filling the gap that was left after the warning from the company. More sprightly situation comes in the form of Bilby here, where we've got this classic wedge break through the 50-day moving average, a gap higher as well at 21 pence, and initial target here towards the 200-day moving average and the main resistance on the way down from July up to around the 32 pence area. But the main, I suppose, the best aspect here is just the way that we've finally broken out of this wedge and could instigate a reasonable recovery. The recovery situation comes in the form of Modern Water, almost identical to Bilby in the way that we've broken out of an extended wedge and pushed through the 50-day moving average at 1.37 pence. Above that, looking for a retest of August resistance towards, 2.7, 2.8 pence over the next few weeks. Stop loss obviously back below that 50-day line. Quite a buzz regarding Regency Mines, and that continues. It looks as though it's a little bit early really for us to say that the stock is out of the woods, but looking for at least a decent end of week close above the 50-day moving average, 0.03 pence, there the blue line, maybe a bit more than that as well, just to get build-up confidence that a turnaround has finally been delivered. That's the sort of the level to break that resistance line, and hopefully that will happen over the next few sessions or during the Christmas New Year period. If we get through that, obviously the target on the upside would be back towards 0.07 pence, 0.08, which was former September resistance. One of the better performers in recent days, and one that's uncharacteristically obeyed the charting rules, is Powerhouse Energy. It was flagged quite a while ago, I think towards 0.35, maybe a bit lower than that, breaking that resistance line from November, and made good progress now above the 200-day moving average, something which we haven't seen for quite a long time. If we can hold above that on an end-of-day close basis or end-of-week close basis, that's 0.42, looking for 0.6 pence, which is a May resistance line projection, and the top of a broadening triangle, from which the shares have actually managed to bounce. One of the heroes of a few days ago was Rockfire. Obviously, there's been a pullback for the shares. What's interesting here, I suppose, is the initial December resistance at 1.2 pence. We've had a higher low now above that level, so that gives us a good stop loss area. Looking for a partial, even full retest of the best levels of the month to date towards 2.4 pence. Nice to see, obviously, in the background, we've got this golden cross between the 50 and 200-day moving averages, which accompanied the gap higher that we had at the end of last month. Finishing off with an old favourite, in the recent past at least, coming in the form of YOLO. Here it was suggested that the shares could make a decent progress, and they've done that in quite a sort of slow and steady manner. We're looking for still something towards 21, 22 pence within this rising trend channel, which can be drawn from September, and that target valid while we hold above the floor of the channel around the 14 pence area, which was also initial December resistance. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.